Professor G-Man Lopo.
Good morning, good afternoon, and good evening to all of you. So today, what I will discuss is all about stock and their valuation. So later, uh, I will discuss about also the features of common stock, and now it is called ordinary shares, diba? Intrinsic value, which is basically the true value of the stocks, and the stock prices, no, determining the common stock values also, the discounted dividend model, the corporate valuation model, other approaches, and also the preferred stock or the preference shares. All right. So of course, what are the facts, no, about the common stock, or now it is called the ordinary shares? Of course, number one, it represents, right, the ownership, right? So if you have your common stock, if you have your ordinary shares, it is basically, it represents the ownership. 'Di ba sabi nila, pag ikaw daw ay may hawak ng ordinary shares, meaning you're entitled, no, or you represent ownership of the company. Pag sinabi kasing ownership, ownership implies control. You can control, no? You have the control over that company. Okay? And also your preemptive rights, no? Your rights to elect directors, yan. So part yan ng ating facts about the ordinary shares. Stockholders, okay, will elect directors, no? Directors elect the management, and of course, ano nga ang ating goal in the financial management? To maximize the stock price. That's the most important of all, to maximize the stock price. Because of the management here, of course, very important is to maximize your returns, to minimize your costs, to maximize your stock price, and to maximize your valuation. That's our goal, no, in financial management. All right. So meaning, in terms of this intrinsic value, so very important also that we need to consider intrinsic value. Alright, what do you mean of intrinsic value? So, it is the true value. Yan ang totoong value, no? Outside investors, corporate insiders, and analysts use a variety of approaches to estimate the stock intrinsic value. So, P0 tayo, ha? Because later, we will compute for the formula or more formulas in computing for our intrinsic value. Alright. So in equilibrium, no, we assume that the stock price is equal to your intrinsic value, no? So kasi nga yan yung true value natin. Common sense, no? True value, that's the true value of the company, no? Outsiders estimate intrinsic value to help determine which stocks are attractive to buy or to sell. 'Di ba? Common sense, no? Stock with a price below or above intrinsic value are undervalued or overvalued. What do you mean of this, sir? If your intrinsic value is 50 pesos, for example, right? And then in the stock market, no, in the PSE, let's say the the selling is 70. Alam mo that the intrinsic value is only 50, and yet in the PSE or in the Philippine market or the Philippine stock market is 70. Bibili ka ba? Malamang hindi, because it is overvalued as discussed in the last bullet. Meaning, if you know the intrinsic value, you can be able to know, or you can be able to identify if the stocks is overvalued or if the stocks is undervalued. What do you mean of this, sir? If the intrinsic value is more than your true value, it is what? It is undervalued. Mas okay daw ibili yon, no? Compare sa overvalued, 'di ba? 'Di ba? For example, alam mo that the intrinsic value is 70 pesos. Pero binebenta lang yan at 20 pesos. So undervalued siya. Bibili ka ba? Of course, yes. So, mas maganda yon, okay? If the stock is undervalued rather than overvalued. Alright. So later, I will discuss to you, the computations, okay? The computations in terms of the stocks, okay? All right. So meaning, in terms of that, no, what are the determinants, no? How do we determine our stock price? So meaning, determinants of intrinsic value and stock prices. Managerial actions, the economic environment, the taxes, and the political climate. Take note, ha? True investor cash flows and true risk is basically the stock's intrinsic value. Kasi nga, yan yung alam natin. Yan yung true value, the stock's intrinsic value. But the perceived investor's cash flows and the perceived risk in nasa right side nyo, that is basically the stock price. In general term, dapat the stock intrinsic value and the stock market price should be the same. That's the basic rule. Kaya lang, hindi yan nangyayari ngayon. Minsan, mas malaki pa ang intrinsic value mo, mas malaki pa ang market price mo than the intrinsic value. Alright. So, in this case, no, very important here as part of the market equilibrium that the intrinsic value is the same as the stock price. Alright. Yan yung basic rule, okay? Alright. So, meaning, in terms of this, no, there are different approaches for estimating the intrinsic value. So, what are the different approaches? So, using the discounted dividend model, alright? Also, the corporate valuation model, the PE ratios, meaning price earnings ratio, and of course, you have EVA, the economic value added approach. So, yan yung mga sinasabi natin about how you valued your intrinsic value. Later, no, we will discuss one by one. Alright. So, what do you mean of intrinsic value? Sir, parang familiar yan. Yes. That is basically the future value is to be presented as the present value. You value the stock, no? You value the stocks, no, in terms of the dividends. So meaning you need to compute for the present value of the future dividends. That's basically the present value. So how do we compute for that? The PO, diba, is the intrinsic value. Take note, D1 divided by 1 plus RS. But ganun, sir? Again, you need to compute for the present value of the future value. Diba? Because we are using discounted cash flows, not a compounded cash flows. Why? Because if it is compounded, it should be 1 to be multiplied by 1 plus R. Diba? Ito naman is to divide so that we can be able to compute for our discounted cash flows. Alright. So meaning, D1 divided by 1 plus R2, no, plus D2 divided by 1 plus R2. Alright, so yan. So, ganun lang. I have with me here, I think, yan. So, example natin. So, meaning, very important also that in terms of the dividend, very important to consider G. Ano yung G? Diba? Naalala ko na sa aking mga estudyante. Sir, G na, G. Okay, akala ko anong G. Yung pala go. The G is, in financial management, is the growth rate. Alright. So, meaning, in terms of the growth rate, diba? Very important here is to identify the dividend, your growth rate. Magkano ba ang ating growth rate? Alright. So, in terms of D1, ano yung D1? Meaning dividend after a year. Alright. So, dividend after a year is you have D1 is equals to D0 to be multiplied by 1 plus G and also raised to the 1. Why raised to the 1? Because it is after a year. Alright. Dito naman, of course, dividend 0 to be multiplied by 1 plus G. Alright. Ano yan, sir? That is basically what? That is basically compound. Yes, compounding. Because you multiply it by the dividend with the growth rate. Alright. How about on the last one, no? Sabi sa last one, if G is constant, the discounted rate or the discounted dividend formula converges to P0 intrinsic value, okay, is equals to D0 meaning dividend, to be multiplied by 1 plus G, okay, divided by RS, meaning rate, minus G, or D1, because the D0 to be multiplied by 1 plus G is D1, diba? To be divided by RS and G, okay? That is basically your discounted dividend formula. Alright. So, meaning, paano yun, sir? Alright. So, in terms of this one, no, since the formula is the future dividends and the present value of D1 is equals to D0, so 1 plus G1, alright? And then also PVD, no, 1 is equals to D1 and 1 plus R. Yan. So, that's basically the formula in terms of the future dividends and your present value. So, P0 is the summation of PV and D1. Alright, yan. So, yun yung formula natin, ha? Alright. So, again, D1 is basically the dividend 1 is equals to D0. Now, 1 plus G1. Alright, so, paano yun, sir? So, very important also, okay, is to know if your G, meaning the growth rate, is more than your RS, meaning the rate. So, meaning, if the growth rate is more than the RS, no, the constant growth formula daw leads to a negative stock price. Because growth rate mas malaki pa sa rate mo, which does not make sense. So, meaning, ang sabi, dapat daw, the constant growth model can only be used, no? Can only be used for what? If the RS should be greater than the growth rate. Sir, ba't ganun? Diba? Kasi nga common sense, no? Kung malaki pa ang growth rate mo sa rate mo, sa return mo, dapat mas malaki ang rate mo compare sa growth rate. Okay. So, meaning, if your rate is more than, alright, so G is expected to be constant forever. Okay? So, kasi, yung kasing growth rate kasi lagi and constant. Alright. That is the reason why your R should be greater than your growth rate. Alright. So, meaning, because of that, diba, using the SML. Alright, ano nga yung SML? I think we discussed that. Diba? SML is your CAPM or Capital Asset Pricing Model. Naalala pa ba yung formula in terms of beta? The higher the beta, the higher the risk. Okay? The higher the beta, the higher the risk is the higher the return. That is basically the SML. Alright. So, use the SML to calculate the required rate of return. So, if RF, meaning the RF is basically the risk-free rate, is 7% and the RM is 12% and beta is 1.2%. Alright. So, what is the required rate of return on the firm stocks? Diba? Ito yung ating formula when we compute for when we compute for our return, diba? RF meaning risk-free rate. Alright, plus RM. RM is the risk premium minus RF is the risk-free rate to be multiplied by B, the beta. Alright. Ano nga yung sinabi ko dati about the CAPM model? Diba? Dapat higher risk, higher return, higher beta. Lower beta, lower risk, lower return. But, ano yung risk doon? Dapat should be systematic risk. Bakit ka systematic risk? Because you cannot control the systematic risk because it is non-controllable and non-diversifiable. Hopefully, naalala pa ito, ha? Alright, hopefully, naalala pa about the 13%. Alright. So, meaning, so, paano yun, sir? Okay, take note of this one. Find the expected dividend stream for the next 3 years and their present value. So, D0. D0 is your dividend. The dividend is $2 and the G is the constant 6%. So if G is equal to 6%, sir, saan pa nanggaling yung 2.12? 'Di ba kanina sabi niya is what if you have a 6%? Sorry, you have 13% as the rate which is basically at 13%. Alright. So magkano yung 'di ba 2 piso dividend 0. So meaning 2 times. So, paano yan? 2. So, meaning, what we will do here is your, what we will do here is to multiply by the growth rate, diba? Which is at 1.06. So, meaning 2 multiplied by 1.06. Why 1.06? Because you have a growth rate of 6% daw. Alright, so meaning 2.112 yan, ha? Alright, second year, bakit 2.247? 2.12 to be multiplied by 1.06. Tama ba? 2.247? Yes. Alright. How about third year? 2.247 to be multiplied by 1.06. Tama ba? Tama ba na 2.382? Yes. Alright. So, yan lang yun, ha? Alright. Sir, saan nakuha yung 1.8761? So, meaning, gagawin natin is, it is to be multiplied by the present value of present value of 1, which is at 1.13. Diba? Diba? 1.13 divided by equal sign, you have 0.8849 to be multiplied by 2.12. Tama ba? 1.8761. Yes. So, we need to compute for our present value of 1. How about the 1.7599? Saan nakuha yun? Meaning, 1.13 divided by equal sign, you have here 0.78314. That is basically your present value of 1 to be multiplied by 2.247. Tama ba? 175. Yes. So, 1.7573. Naiintindihan ba ako? We will compute for the present value of 1. Ano nga yung ginagawa natin? 1.12. 1.13 pala to. Divided by equal sign. Sa calculator nyo, ha? Calculator. Diba? Compute for the present value of 1. Alam nyo na ang present value of 1. Or, you can also use that in terms of manual. 1 divided by 1.13 raised to the 1, raised to the 2, or raised to the 3. So, ganun lang, ha? That's how you compute for the dividend. So, 2.12, present value niya ay, the present value niya ay 1.8761. Yung second year naman, okay, yung second year naman is 1.7599. Alright, so yan. Alright, so also in terms of the third year, you have 2.382 is you have 1.6501. Yan, so meaning that's your present value. Okay? Alright. So, what do you mean of intrinsic value? Ito na yung formula natin about intrinsic value. Alright. So, in terms of the intrinsic value, the formula is P0 is equals to D1 divided by RS minus G. Diba 2.12 is our dividend 1? Yan. We divide it by 0.13. 0.13 is our, diba, rate? Yes. Minus G is 0.06. So, meaning, the intrinsic value, no? The intrinsic value of the company is 30.29. Paano yun, sir? Halimbawa, San Miguel Corporation, nakita mo, San Miguel, they are selling, halimbawa lang, they are selling 15 pesos. Tapos, na-compute mo that the intrinsic value is 30.29. Buy or sell? Buy or you will not buy? Of course, you should buy because the intrinsic value is 30.29. Binibenta lang nila at 15 pesos. Yan. So, meaning, you will purchase stocks if the intrinsic value should be greater than the market price. Market price na binibenta sa stock market. That's the meaning of intrinsic value. Alright. How about naman, what is the stock expected value 1 year from now? So, D1 will have been paid out already. So, expected P1 is the present value as of year 1. So, meaning D2. So, gagawin natin yan every year. Diba kanina, what we did is D1. Yan. So, dito naman. So, dividend 2. Same lang naman yung formula, pero ang magbabago lang dyan yung 2.247. How much now would be your intrinsic value after 2 years? 32.10. Magkano yung kanina? A while ago is 30.29. So, lumalaki. Of course, lumalaki yan kasi lumalaki din ang ating dividends. Alright. But also find expected P, no, as follows. So, of course, yung sa baba, yan yung pinakamadaling formula. P0, no? So, meaning, di ba 30, makano yan? 30.29. Just multiply lang yan ng 1.06. You have now 30.10. In the board exam, mas madali ito. Okay? Mas madali ito. Alright, the second bullet. Alright. Next naman, no? Find expected dividend yield, capital gains yield, and the return on or the return during the first year. Alright, so very important also that if you have this information to compute for the dividend yield, alright? So, how do we compute for the dividend yield? D1, meaning dividend 1, divided by P0. Alright. So, divided by P0, that is basically your dividend yield. So, we discussed, diba? We multiply na, diba? Or, sorry, we compute na for our dividend 1, 2.12. Let's divide it by our P0, meaning your proceeds or the intrinsic value. So, meaning you have 7.0. How do we compute for the capital gains yield? So, P1 minus P0 divided by P0. So, 32.10 minus 30.29 divided by 30.29, you have 6.0 as your capital gains yield. Also, in terms of the total returns, ganun din, dividend yield plus capital gains yield. So, 7.0 plus 6.0%, you have 13.0. So, ito lang naman is more on the formula base on how to compute for dividend yield, capital gains yield, and your total returns. Alright. How about naman in terms of this one, no? What would the expected price today if G is 0? Napakadali. If G is 0, tignan mo yun. Tignan mo yung first year, second year, third year. Of course, 2 pesos pa din. Kasi nga, wala kang growth rate. Hindi lalaki ang kita natin. No? So, meaning, what is the formula for the intrinsic value? PMT divided by R, which is the rate. So, 2 divided by 0.13. Our intrinsic value is 15.38. Ganun kadali. Okay? Alright. How about if you have super normal growth? Okay, ang laki. 30% ka agad. Okay? For 3 years before achieving the long-term debt of long-run growth, of 6%. So, paano yan? So, can no longer use the constant growth model to find stock value. Yes. However, the growth does become constant after 3 years. So, paano yun? So, ganito lang yan, ha? Alright. So, meaning, take note of this one. Yung first year natin, the growth rate is 30% hanggang third year, 30%. Pero after third year, yung growth rate mo na is 6%. Same pa din, 2 to be multiplied by 1.13, you have 2.60. Sorry, mali ako. 2 times 1.30. Okay? So, meaning you have 2.6. Okay? Then 2.6 times 1.30, you have 3.380. Then, 3.380 times 1.30, because of the growth rate, you have 4.394. Then, you compute for the present value of it, meaning 1.13 divided by equal sign. Diba? Present value of 1, just multiply it by the 2.6, you have 2.301. Same also in the second year, just multiply it by the present value of 1. Okay. Tingnan mo yung after third year. So, after 3 years pala, you need to compute for what? You need to compute for the intrinsic value of 4.658 divided by 0.13 minus 0.6. The intrinsic value is 66.54. But how do we compute for the 4.658? Because it is basically 4.394, diba? You have 4.394, just multiply it by 1.30. Bakit? 1.06, sorry. Tama ba? Tama, diba? 4.658. Kaya, yan, no? So, meaning, So you have 66.54. How do we compute for the 46114? Meaning present value of 1, which is at 1.13 divided by equal sign 1, 2, 3, 4. Tama ba? 0.6133. Yes. Just multiply it by 66.54. That's the true value. Tama ba? Okay. So meaning the P3 here, okay. So the P3, so again saan nakuha yung 46114? So should be pala 3 years pala dapat, no? It should be 1.13 divided by equal sign 1, 2, 3. Nakuha ba? 0.69305. Yes. To be multiplied yan by 66.54. So meaning 46114. Tama, 'di ba? Ayan. So add all of this, that would now be your intrinsic value. The intrinsic value is 54.107. Nakuha ba ito? Hopefully nakuha ito, ha. Hopefully nakuha ito. Alright. Yan. Next naman, okay, you have find expected dividend and capital gains yield, no, during the first year and the fourth year. So with this one, so dividend yield first year, so same kanina, 'di ba? 2.60 divided by 54.11, you have 4.81. Capital, okay, kasi 'di ba kanina, capital gains yield same pa din in the first year. 'Di ba? You have 13% kanina. Then we have 4.81 because ito 'yan, yung dividend yield. Yan na yung ating tinatawag na capital gains yield. So during the non-constant growth, dividend yield and capital gains yield are not constant. So and capital gains yield is not equal to your growth rate. So after that one, so if your T is 3, the stock has a constant growth and dividend yield of 7%, while capital gains yield is at 6%. Alright. Next, what if ganito naman, no? So same yun kanina, ha? So maganda, growth rate mo is 0. Take note of the 2 pesos. First year, second year, third year, still 2, no? Kaya lang after 4 years ka na daw makakaroon ng growth rate ng 6%, kaya 2 times 1.06, you have 2.12. Walang problema, no? Compute for the present value of 1, just multiply it by 2. After 2 years, ganun din. Present value of 1, then also in third year, ganun din. But take note of the fourth year. You need to compute again for the intrinsic value. 2.12 divided by 0.13 minus 0.06, so you have 30.29. 30.29 should be multiplied by the present value of 1. Magkano yung present value of 1? 1.13 divided by 1, 2, 3, and to be multiply it by 30.29. Tama ba? 20.99, yes. 20.99 plus 1.39 plus 1.57 plus 1.77, that is basically your intrinsic value. Diba? Madali lang. O, same pa din. We will compute again for the dividend yield. Okay? So, 2 divided by 25.72 as discussed kanina. So, 7.78. Ganun din. 13 minus 7.78 as part of the dividend yield. Capital gains yield is at 5.22. So, after 3 years, the stock has a constant growth and dividend yield of 7, while capital gains yield is at 6%. Okay? Alright. Also, what if the stock was expected to have a negative growth rate o negative? Alright. Meron bang ganon? Growth rate pero negative. Would anyone buy the stock? And what is its value? No? Yes. No? Even though dividend are declining, the stock is still producing cash flows and therefore has a positive value. Tinan mo kanina, no? Meaning you have an intrinsic value of D1. Kaya lang instead of 100%, no, to be multiplied by 0.94 kasi nga minus ng negative 6, no, to be multiplied to be divided by 0.13 minus 0.06, you have 1.88. You divide it by 0.19, so you have 9.89. Okay, 9.89 would be the intrinsic value na. Okay, So far ba clear ha? Hopefully clear to. Okay? Alright, so hopefully clear. No question ha? Hopefully clear ha? No question. Alright. Alright, next is all about find the expected annual dividend yield and capital gains yield. So, same pa yan, no? So, growth rate mo is negative 6 na. So, dividend yield is 13% minus the negative 6 because of, sabi nga, you have daw lost. Alright, so lost of the negative 6. So, yun. So, that's basically, magkano na yung ating dividend yield? The dividend yield is at 19%. Alright. Okay. So, since the stock dividend is experiencing constant growth, dividend yield and capital gains yield are constant. No? Dividend yield is sufficiently large of the 19%, okay, to offset the negative capital gains. Alright. So, ganun lang yan, ha? Alright. So, in terms naman of the corporate valuation model. Okay. Sir, anong ibig sabihin ng corporate valuation model? It is also known as the cash flow model, no? It suggests that the value of the entire firm equals the present value of the firm's free cash flows. So, yan ang ibig sabihin, no, ng ating corporation valuation model. So, meaning, pag sinabing ganyan, no, it represent, or it suggests that the value of the entire firm equals the present value of the firm free cash flows. Remember, that the free cash flow is the firm's after-tax operating income less the net investment. So, ito yung formula natin. Okay. The free cash flows is equals to EBIT to be multiplied by 1 minus T, diba? Tax yun. Plus depreciation and amortization. Alright? Then, to be deducted by the capital expenditures, and we also add NOWC, meaning that net working capital. Alright. Sir, bakit po sa free cash flows we added our depreciation and amortization? Kasi nga, 'di ba? It is a non-cash transaction. Kaya nga it is known as the free cash flows. Alright. So, yun naman yung formula lang naman. Okay. So, how do we apply in the corporation valuation model or corporate valuation model? So, we find the market value, alright, of the firm by finding the present value of the firm's future cash flows, no? Then subtract the market value of the firm's debt and preferred stock to get the market value of the common stock. Then divide the market value of the common stock by the number of shares outstanding to get the intrinsic value. So, ganun lang. Ganun lang yung ating pag-compute ng ating corporation valuation model. Again, find the market value of the firm by finding the present value of the firm, future cash flows, then subtract the market value of the firm's debt and preferred stock to get the market value. Then you divide it by the market value of the common stock. Okay? Alright. So, also, what are the issues, no, regarding naman about corporation valuation model? So, often preferred, no, to the discounted dividend model, especially when considering the number of firms that do not pay dividends or when the dividends are hard to forecast. Kasi ganun talaga yan, especially in terms of the corporation valuation model. Okay? Similar, the discounted dividend model assumes that at some point, free cash flow will grow at a constant rate. So, may tinatawag yun dito na horizon value. No? It represents the value of the firm to the point of, or that at the point that growth becomes a constant. Alright. So, paano yun? Okay, so meaning, what if ito yung ating corporation valuation model? So, we have negative 5, then 10, then 20, then 21. Same as we discussed kanina. Same lang naman. So, meaning, if you have negative 5, so, just multiply it by the present value of 1, which is 1.10. Paano yun? 1.10 divided by equal sign 1 o times negative 5. Tama ba? Okay. Negative 4.5, di ba? Negative 4.4545. Okay? So, next naman, 10 years, ganun din, to be multiplied by the present value of 1, which is at 1.10, divided by equal sign, you have 0.8264. Tama ba? Yes. Alright. Ganon din siya in 3 years. Kaya lang, in terms of the 3 years, take note ha, you need to compute for the growth rate 20 times 1.06. So, you have 21.2. Ganon din. 21.2 divided by 0.10, that's the rate. Then, minus ng 0.06 of the growth rate. Magkano yung value natin? 530. Yung 530 is to be multiplied by what? Multiplied natin siya ng ating present value of 1, which is 1.10 divided by equal sign 1, 2, 3, 0.75 yun ha, times 530, tama ba? 398. Yes. So, 398 plus 15 plus 8.2. Alright? Then, minus 4545. Magkano ang intrinsic value? 416,942. Alright. Next. Also, in terms of this one, very important to know. So, if you have negative, what is the firm intrinsic value per share? Kanina, what we compute is, there's no per share. For example, the firm has $40 million debt, and preferred stock, and has 10 million shares of common. So, 40 million sa debt and preferred. Tinan mo class, no? Bakit yung 40 million ay nasa debt and preferred stock and preference? Sabi kasi sa financial management, ang preference shares daw ay per se part of liability. Because, di ba, wala naman siyang ownership. Okay? Per se lang naman. Okay? But of course, in your FAR, it is basically what? It is not, or it is basically part of your equity. Alright, yan. So, market value of equity is equals to market value of the firm minus MV of debt and preferred. So, you have 416.94 minus 40. Magkano yung market value of equity? 376.94. Diba? So, how about naman value per share? Of course, the 376.94, just divide it by 10. Of course, the 10 million. So, you have 37.16. Napakadali, diba? Alright. So, there are also other approaches, in terms of the equity. The analysts also use the multiples of PE, price earnings, price cash flows, price sales. So, meaning, there are 3, no? So, examples of this one, based on the comparable items, estimate the appropriate PE, price earnings. Then, multiply this by expected earnings to back out an estimate of the stock prices. So, yun lang yan, ha? Alright. So, you have EVA. So, class, when we are now in the cost of capital, I will discuss about EVA, okay? But now, it is more on theoretical muna tayo, ha? Alright. So, EVA is equals to equity capital to be multiplied by the ROE, return on equity, minus your cost of equity. So, market value of the equity is equals to the book value of the equity, alright, plus the present value of all future EVA, economic value added. The value per share is equals to market value of equity divided by per share. So, don't worry, no? I will discuss it when we are now in the cost of capital. Alright. You have also here preferred stock. Alright. Diba sabi ko, in the financial management, preferred stock or preference shares are per se a part of parang a liability daw. Pero again, in the FAR, PFRS, not be confused ha. In the PFRS, it is part of your equity. In financial management lang naman. Okay? So, when you say about preferred stock, it is an hybrid security, yes. So, like bonds, preferred stockholders receive fixed dividends, diba? They're only entitled, diba, for dividends, no? And and must be paid before dividends are paid to the common stockholders. However, companies not can omit preferred dividends. Yes, no, they can omit the 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 preferred dividends, 'di ba? Because of uh, this, without fear of pushing the firms into bankruptcy. Kasi nga paano kung wala ka naman pera pambayad, lalo na ngayon because of the pandemic, right? Yan. Alright. So, meaning, if the preferred stock with the annual dividend of 5 sells for 50, what is the preferred stock's expected return? So, the formula here is VP, meaning the intrinsic value of the stocks, right? Dividend, tingnan naman dividend, walang growth rate yan, ha? Class, ha? Walang growth rate sa preferred stocks kasi nga hindi naman siya yung owner ng stocks ng equity, only the ordinary or common shareholders only. That's why walang G dito, ha, walang G. So meaning 50 is equals to 5. So we need to compute for the rate. So given naman yung ating annual dividend of we compute now for the market value or intrinsic value of 50. So magkano yung ating interest? 10%. So that's basically what, parang ano lang, parang to compute lang for our rate. Alright. So I believe this is the last slide. So hopefully you learned about the stock valuation, alright, about the common shareholders, and also about the preferred shareholders. So next, I will discuss about cost of capital. Okay? Thank you and have a good day. Bye-bye.